What's up, everybody? John and Mason, the place time for the Money Tip Tuesday, and today's topic is long-term care. LTC, they call it LTC, or long-term care. And most people are not familiar with it, what it is, what it covers, what it does not cover. There's a lot of misconceptions, or people think that their health insurance covers it, but it doesn't. So I'm going to go over some of the basics today. And if you do want to have a follow-up conversation, again, to more details or review what you currently have, feel free to message me on Instagram or Facebook or any of my social media contacts here. I'd be more than happy to have a conversation with you. But let's get into the basics. LTC is long-term care. It's a form of insurance. And if you're looking for any type of long-term care, there's three options. You have three choices. That's it. Three choices. Because there's a 72% chance your parents, yourself, somebody in your family is going to need some form of long-term care. Long-term care is home health, nursing homes, adult daycare, chronic illnesses. You can't walk, talk, bathe. It's called ADLs, activities of daily living. The government says if you can't do 2 out of 6 things by yourself, you've qualified for long-term care. Now, the challenge is long-term care in our country is very expensive. It's in Florida right now, the average is around $8,000 to $10,000 a month. And you're coming out of pocket. Your health insurance is not covering all that. Well, my uncle passed away a couple of years ago up in Jersey. He was a military guy. Some of it was covered. My aunt still came out of pocket, $1,000 a month. There's some people that maybe have a nursing home situation and they have to come out of pocket all of it. So it is very expensive. If you know someone that's gone through cancer or something like that, that's long-term care, okay? So breaking it down, health insurance doesn't cover that, okay? I have to come out of pocket dollar for dollar. Well, that's pretty expensive. Is there a way that I can do this maybe for pennies on the dollar and still get everything covered and get the proper care? The first option for long-term care is called a standalone. It's a standalone policy. There's pros and cons to everything, so I'm going to give you both sides. Pros, there's pretty much no underwriting. You're answering no to all the questions. The only thing that would decline you is if you really are already sick. You already have all those issues, but there's typically no blood work, no urine, nothing. It's just answer a bunch of questions, you've qualified. Very simple. That's the other benefit. It is simple. The challenge is if you don't use it, you lose it. A lot of the older plans, if you didn't get long-term care, there was no death benefit. So you would put all this money into this plan, never used it, and it's gone. And that's the other challenge. It's very expensive. Typically, most plans are $500 plus a month. I'm not going to give you companies, but they're not cheap. They're not the cheapest thing. They would typically be just for the affluent market, is how they originally were set up. And there's been a lot of miscalculations because people are living older now. So a lot of companies had to change how they were doing these. Now there are some plans that if you don't die or you don't get sick, there is a mini death benefit. So they've adjusted them, but this is the first option. Not always the best, but it is an option. Second option is general life insurance. Yes, general life insurance now, if you die, it's going to pay. But if you get sick along the way, heart attacks, strokes, cancers, chronic illnesses, that kind of stuff, you can now access your actual death benefit as a living benefit. So there's 2 basic options. There's term life and then there's permanent. There's different types of term, there's different types of perm. Not going to get into the details on this one. Term life, very basic. It's the cheap stuff. It's affordable in my opinion. You know, obviously you should have at least $50,000 for every $50,000 of income, you should have $1 million of coverage. So most people are underinsured. Okay. The challenge with only having term is 98% of the time it's going to expire. It's never going to pay out. It's going to go away. That's the idea. You're not going to need it later in life. But the wealthiest people typically like permanent plans, so they know they can guarantee to pass money on. But that's a different conversation. As far as which one's better, term or perm, guys, the best type of life insurance is the one that is in place when you pass away. That's the best type. But there's a 98% chance you're going to outlive your term. There is term life now that has the living benefit access. If you get a heart attack, stroke, cancer, etc., you can access the term death benefit to cover the medical expenses. That is available today. Then there's permanent plans. There's whole life. There's UL, GUL, IUL, VUL. There's all these different types of permanent plans. I'm just letting you know that there are benefits and there's negatives. Pros, they last forever. So it's guaranteed going to the family. That's the best part. If you want to guarantee money going to the kids, permanent plan's the way to do it. There's a living benefit that's always going to be there. So when the term may expire, the permanent plan's kicking in. So if you're 75, 80 years old and you need long-term care services, you can access your permanent death benefit as a living benefit so you do not have to come out of pocket. You don't sell your real estate. You don't use your IRA money, mutual fund money. You don't sell it. Leave it alone. For pennies on the dollar, you can cover your medical expenses. There's also tax-free cash in there. You can withdraw the cash. There's ways to pull the money out. It's all tax-free. So if taxes do go up in the future, this doesn't affect you. So a lot of people like to utilize the tax benefits. I'm not talking about the growth or the returns here. I'm talking about just the taxes and the cash. Challenges, it's a longer commitment, and it's a little bit more money than term. So you have to find out what is your need. What is your need? Everyone's got different needs. The challenge with life insurance, though, is that there's underwriting. There's underwriting. You may get declined. Now, the newer life insurance plans don't require, about 80 to 90% of the time, don't require blood work, urine testing, etc. You can just say, hey, I want a life insurance policy. I want to get the best rating. How fast can I get it? Some of them today are the same day. Some take a week. It just depends, but it's easier to get insurances now. Okay. You got some issues, you can't get it. You have some issues, you can't get it, but there is some affordable stuff here. But let's just say you already have a health condition. You already have some stuff going on. You can also look at an indexed annuity. I like indexed versus the other type of annuities. With index, you get the ups in the market. There's a cap, no losses. The new ones have 0 fees. There's also a long-term care doubler. So if you're getting $3,000 a month, it'll pay you $6,000 if long-term care is needed. What's the challenge though? The good news is there's no underwriting, but you need a lump sum typically. Putting $100 a month into that is not really going to be beneficial long-term for really anything. I mean, you can put $100 a month in anything, it's not going to do you much. But if you have, let's say, $500,000 or $300,000 in an IRA or an old 401k, and you want to protect the principal, get the ups without the losses, get rid of the fees, and get a long-term care benefit because you can't qualify here, the indexed annuity is a great option. Maybe you already have some money managed. Maybe you got a couple $1 million sitting in an account saying, Mr. Advisor, I want to make sure that long-term care does not eat away at my account. It does not eat away at my account because it's the #1 cost for bankruptcy right now. It's healthcare. So keep your other assets in play, move a portion of your money into an annuity that has a long-term care benefit. This way you don't have to come out of pocket. Allow the insurance money to pay for it first, keep everything else in play. So if you're sitting there thinking, John, I need to get more information on long-term care, how's it working? Maybe I have an old school plan, can you review it? Feel free to reach out to me, be more than happy to have that conversation with you. But again, to review, standalone, life insurance, indexed annuity are your 3 options. And I put COVID-19 up here for a reason. Why? If someone got sick, okay, they went to the hospital. These plans don't cover COVID if you get sick, meaning in the hospital. But let's just say you got sick and that led to a stroke. Then you can access your living benefits. So it's the effects of what COVID may do to you. So if someone that maybe has those effects, this could be an option. If you're sitting there thinking, John, I don't have life insurance, but what if they get the virus? If you get the virus and it causes other things, this can help. And by the way, these will pay. If you get sick and you pass away from COVID, okay, God forbid, life insurance will pay that claim because it's life insurance. It's not accidental death. Accidental death is accident. Life insurance is life insurance. Does that make sense? So again, standalone, life insurance, annuity are your 3 options for long-term care. With that being said, this was a bit longer Money to Tuesday than usual. Hope I added some value. Have a great week and talk to you soon.